What's going on, everyone? All right, I know it's been a little bit of time since the last time I uploaded a trade review, a trade recap, or anything like that. Um, and I've been posting here and there, but real quick before I get into this trade recap, I want to talk about a few things here. Uh, and actually, today's recap is going to be really good because I had to break away and spend a little time getting back into the lab, right? So like it happens sometimes. A lot of you know I've always been into basketball, played basketball, all that. So what happens sometimes, and you can relate it to any sport, like baseball, whatever. There's slumps, right? There's a shooter slump, a hitting slump, whatever. And sometimes you got to go back. Like you have to go back, and I know y'all have heard me talk about this plenty of times. And I have different metrics that I look at where if, let's say, I have this certain lose streak, then I kind of take a step back. Is it me, the market, or both? Right. And then if it continues, like there's times where, you take a step back and sometimes you may just need to take a break. Because think about it. We do this every day in, day out, day in, whatever. Some days you get a trade, some days you don't. Some days, but you're engaged every day typically. That's why I also like if there's a holiday, a bank holiday, if the markets are like the actual markets, the New York Stock Exchange is closed. I don't trade all those days. I take advantage of those days to take a break. And I know when we're early, see, I'm a little over 5 years into this. And I know early on, you're learning, you're grinding, you're trying to figure it out. You want to trade. It's exciting, right? And you want to do it every day, every day, every day. And that's why I believe a lot of people in those first 1 to 3 years or so, even up to 4 or 5 or more, but typically in those first 1 to 3 years, have so much failure and so much, blowing accounts and all that is because we are typically excited, right? Like we're excited. We want to click buttons. We want to go, learn, figure things out. And we don't really know when it's time to take a step back, take a break, or, if we just need to reanalyze things. So I'm constantly trying to do that. And what happened to me was I hit my, I'll have a losing streak, right? Like it happens. I win, lose. So typically, very rarely do I have back-to-back losing days. And, I will sometimes, of course. There's nothing wrong with that. And if I have a back-to-back losing day, okay, cool. 90+% of the times on that third day, I'll have a winning day. And with my money management and my risk reward ratio that I typically have, that one winning day will take care of those 2 losing days. So it's not a big deal. It's not a big issue. And every now and then, really over the last year and a half, my statistics have shown me that basically I'll have a 3-day losing streak once every like 2 to 3 months. So what happened is in April was rough. I had probably my best month ever in March. And then I get in April, started off okay. Then it was kind of up and down. And I'm still going to do that monthly review for April. I just haven't done it yet, but I will get that done here this week because you're not going to want to miss that as well. You're not going to want to miss that. So I had one of those streaks where it's like, okay, I lost 2. I'll pull it up when I do that monthly review. But I think I lost 2, then I won, then I lost 2, then I won. I'm kind of like, this is a lot of the tariff talk and stuff like that. So I'm kind of like, is it me? Is it the market? Could be both. So then at one point, I got to where I had like 2 out of the last 7 days winners. I'm like, ooh. And then because of the way it fell, I ended up getting, I think, 6 losing days in a row. 5 or 6. I got to go back and check. 5 or 6 losing days in a row. And I'm like, okay. Now, because what happened too is whenever I had the 3 losing days, I that's what I typically do is I'll take the weekend to because I do like my chart reviews every day, but I took the weekend to say, all right, that's my step back. That's my step back. Let me figure out, let me do something, let me do a deeper dive and figure out what's going on. And then when I came back and I had a couple more losing days, I'm like, all right, now is the time to take a break, pump the brakes, pause it. My accounts are still in good standing because of my money management. Although you'll see in my my monthly review, I did have a big mess up where I did break my money management once and I paid for it. But so now it's the time to take a break. So I took a break, and I think it was like a 10-day break. Something like that, including weekends, non-trading days. And so that's where I'm like, all right, I really need to get back to the drawing board, get back to the fundamentals. I need to bring it back to the basics and build back from there and figure out what's going on. And with that, I learned some basic things that I was missing, I think. Basically, I added to my toolkit. I made it more simple, but at the same time, I think this is what I needed. Because for those of you that have been around, and I did my yearly review from last year and going into this year, 2025, I was at like 58, 59% win rate for last year. And my risk reward ratio was a little over 1. It was under 1.5, but it was like 1.2 or something like that, risk reward ratio. So my goal for 2025 was to bump that up, preferably 2-to-1 or as close as I can to a 2-to-1. And I wanted to bump up that win rate to about 70. Now in March, I had a 75% win rate, but then April was like a 38% win rate. So in my opinion, it was kind of like that needed to happen. That needed to happen to stop, figure things out, and now I think what I've discovered will bump me up to a higher win rate and a better risk reward ratio. I may do a video into exactly what it is, and I need to do another video on exactly the kind of the model that I'm trading, because it keeps shifting slightly, and I'm looking for a few more things. But in this trade recap, and this video might be a little bit longer, but I'm gonna actually, it's not going to be when I get in the trade recap. But basically, you'll see some of that in this trade recap. And I think what I did was unlock the when things are going to happen. So like, let's go to the charts real quick here. All right, let me explain this. So for example, let's say I was looking at these highs when price was down here, and I was like, yeah, I'm pretty sure price is going to reach these highs. So my problem was, let's say this candle was here, and then we're here on this day, and we're kind of going up. I would hang my head on, we're gonna get there. Like, that was my bias, and I was kind of just like, we're gonna get there. So any long opportunity in here, I was looking to take it through that, right? So the problem is there's a certain thing called manipulation, and I kept getting caught in manipulation to bring price lower or whatever. That's just an example. Like if I was looking at here, and there's been so many times where I'm like, I know where price is trying to draw. Like, look at these relative equal highs right here, right? And we have those relative equal highs. And if we're in this mess right here, there was so many times where I'm like forcing it to go draw through that. And I'm like, we're going to go, we're going to go, we're going to go. So I would get my bias right, but I wouldn't get my when, not all the time necessarily, my when it's going to go correct, right? So like what happens is each time there's manipulation, I'm trying to go through it to there. And then it just gets brought down and I lose or whatever, and sometimes I'd get a win, but it's like, man, what's like, so anyways, I think I discovered figuring out the when. Obviously, the two biggest things are time and price. Just like Ice-T always says, the 950 macro, 10 a.m. to 11 a.m. silver bullet, all the macro times and all the silver bullet times. And so now I pretty much figured out how to align my daily bias with my trade idea. And I still don't have to have my trade be in the same direction as my daily bias. But man, I think I figured it out. All right, so now let's jump into the chart review here. All right, so let's go to the weekly first real quick. We have this weekly fair value gap. So I'm watching that still. Okay, weekly fair value gap. And we took this imbalance and, we're going up on the week, right? So we're going up. We have FOMC tomorrow. So tomorrow afternoon, so we got to be aware of that. But if you look, the weekly chart is still bearish, right? Because we displaced, ran down, took all these lows, took this low, sell sign down here, and we're pulling back, but we have not had a market structure shift back to the long side yet. So technically, we're still bearish on the weekly. The daily, we're more bullish, right? Because if you look, you have this run down, pull back, run down, pull back, higher low, and then it took this swing here, have a lot of displacement in here. So now we have a market structure shift to the long side, right? So looking at this today, I was looking at this here. We have this volume imbalance, very, very key. That's a volume imbalance, pretty, recent. And then here is a, let's see, where was it? Right here, we have this daily fair value gap right there. Okay, so I have this volume balance and this daily fair value gap. Now, this is the current bar. So before on last Friday, we ran right up to inside that daily fair value gap. So basically what I'm looking at is, okay, are we going to, well, we had this down close day on Monday. So we open here. So I'm looking at, all right, if we're bullish overall right now, where could we likely continue to draw to? Well, I'm looking at this swing high right here. Okay. But since we have this fair value gap here, it's not necessarily just going to go straight through it. It could, but that wouldn't be my expectation. So if it's going to bounce here and go down, where's it going to go down to? It's volume imbalance, right? So here at this volume imbalance, now is my expectation of potentially continuing up. Unless if, that's the expectation anyways. But what could happen, since once we get to this area, then that is where the first, it could continue down, right? So you got to have that awareness as well, because, does the market want to continue to be bearish? Well, then it'll continue past this. If it wants to continue to be bullish, then it'll come off of this level here, right here, and continue up through that. So at this point, you kind of have to see what price wants to do here. But in the meantime, this is a nice draw. I expect price to draw here since I am bullish on the daily. I am expecting price to draw right around here inside this imbalance, and especially if it hits the midpoint. And then, since I'm bullish, I expect price to continue up. That's what I'd be anticipating. But you have to be able to be aware that, hey, it could continue down if price was going to remain bearish. So for now, I'm still bullish. I was still bullish in the morning. And then we go down to the 15-minute chart here. And this is, let's see. Let's go to replay, bar replay, so we can cut this out. All right, so this is what we were looking at, 9:15. So immediately what I'm looking at is we have the London low right here. We have the Asian low, but we have not taken the London high. We have not taken the Asia high. So I noticed that immediately. We have not taken the highs on either one of those. So, okay. But we have taken the lows. Okay, nice. So outside of that, I'm looking for any areas of smoothness. So this is a pretty smooth area right in here as well. And then, of course, we have some imbalances and things in this leg down. But besides that, I'm like, okay, this area right here looks too clean. And that's right along that Asian high. And then London high is not touched. So because of that, I'm like, okay, my bias is long. And we know if you're looking to go long, you first want to see, what do you want to first see? You want to first see manipulation to the short side, right? So price is here. You want to see it manipulate to the short side and then distribute to the long side. That's if you're bullish. So I am bullish. So now I'm looking at this like, okay, well, taking Asian low, taking London low. I want to see manipulation after the open down and then price to distribute back up through London high, Asia high, and this area of smoothness. That's what I'm looking for. And so now that's the 15 minute. And here's that volume imbalance, right? So when we come down, I want to see price get there. Well, first let me zoom out a little bit because this was the big picture that I'm looking at. Okay. So we're already down here. So I'm looking at like, oh, we've already traded through all this, traded through this low. So what else could it be reaching for if not just this volume bounce? Because really inside this volume bounce, it could turn around anywhere. It doesn't have to go to the middle. Even though that's like what I like to see. So immediately I'm drawn over here to the left. Look at this area of smoothness. Sell side liquidity right here. So I mark this as my sell side liquidity right there. Very clean. Sell side liquidity right there. And that lines up with right above the midpoint of that volume imbalance. So now I want to drop to my 1 minute. Oh, and real quick, I can take this entire dealing range right here and mark it and look at the entire range and see kind of where equilibrium is, right? So, and then if it draws lower, for example, down here, I can see, oh, equilibrium is right here where that London high is. And above that, in the premium is that area, that targeted area. So what I'd be looking at is taking a long down here in the discount up to the premium, or at least up to equilibrium. It's kind of what I'm looking at. So now let's drop down to the 1 minute. And here we are. It's 9:30 on this 1 minute. So we're going to jump forward here a little bit. Oh, I hit the wrong button. Hold on. Hit the wrong button. Let me go back to the open. So here we are at the open, and we're going to jump forward. And I'm watching this here, and I'm like, okay, well, I don't really want to see it going up first, but what it's doing is this minor buy side liquidity here, kind of like this area of smoothness in here and relative equal highs here. See right there, relative equal highs. So what price is doing is it's just running up and doing a sweep of that area and then dropping down. All right. So it's dropping down to where? Boom. Sell side liquidity right there. And let's bring this up. Let's make this bigger so we can see it. Right there. And then now you can look at this and say, oh, is that a sweep? No. Because what happens sometimes is, and plus we don't have a market structure shift yet, but what happens sometimes is it'll run down here. And then I've seen this a lot of times. It'll run down here, pull back up, and then you'll see a run on sell stops. Run on sell stops, and then you'll get your market structure shift here, and then you'll have a fair value gap somewhere, come back down, and then distribute. So in this area, could be like you want to be careful of not getting caught up in this and then looking for like a little gap in here and going long there too soon. And then not only that, but from this area, I'm immediately looking right here at this area of smoothness as well. So that's looking clean, and I go for the low-hanging fruit, right? So if I get a trade somewhere, this is going to be my target right here. Like, I have plenty of targets higher. Plenty higher. London high. There was an opening range gap. There's a lot of reasons I could go higher. But for my trade, I like to go for the low-hanging fruit. Anywhere from... Now I've adjusted it. I want to be anywhere from 50 to 100-point winners, basically. But I want at least 50 points. I'll go for like 40, but I want at least 50 because I want that 2-to-1 ratio. I really want that 2-to-1 ratio. All right, so let's move forward here. Jump up. Now, boom. Look at this run right here. Little stop run. Look where the body's closing. Look where the body's closing. And then what do you have here as well? You have a breaker. Because you have this low, high, lower low, and then you're going to get a higher high. So that's going to be a breaker right in here. And I'll go to my trading screen here in a second. I'm just explaining this kind of stuff. Okay. And then also displacement up, inversion. There's a lot of reasons here. This is exactly where I wanted my long to be. And then there's your fair value gap. Here's your market structure shift. We took this swing right in this fair value gap. And that's what it looks like right there. So let's go. Let me go to my trading chart here real quick. All right. So we can see with my everything that I had here. Okay, so here's that rundown. Here's the breaker. Okay, we had an inversion here. We had this. I wanted to see this become an inversion as well. And then we traded right here, back into it. I entered long, as you can see, with 4 micros. This is my live account, which I had a really good day on it. At 782.50, 4 micros. And then, of course, I was copying, leading my Apex counts. And then we went up, up. Created this fair value gap. And then we had this one here, which I knew would kind of stall price a little bit right here. As you can see, it did, pulled back, and I actually added in 2 more micros, targeted this high right here, took my profit, and it kept going. Now, let's go into, before I go into the video or anything, I want to show a couple things here. Why did I add in? Well, this to me is I had zero doubt that we weren't going to get clear here, that we weren't going to go through there. The reason why I knew we were going to go through there is because I had higher targets. We had previous day low up here. We're below the midnight opening price. We had opening range gap up there. We had that London high that I told you about. We had the Asian high up here and that buy side liquidity all the way up here where last month's high was. And the new day opening gap was up there as well for today. Lots of reasons why we're going to go up there. So I actually could have, it's not my trade, my model, but I could have just held it to try to reach up there, or at least take the London high or the Asian high, something. But really, we had this I forgot to go into that. We had a 4-hour volume imbalance up here as well. And, all that just screaming targets. So because of that, when price was down here, I had zero doubt in my mind that we weren't going to trade through this smoothness up here. Zero. So when we pulled back here, I was like, yeah, we're not going to trade back below this fair value gap. I entered more because remember this, everything has an aspect of inversion, right? So as price was coming down, this right here could be a bearish order block, this up close candle here, this purple one, and send price lower. So when price came back up and it closed above it, that's now an inversion. Okay. It's an order block, but an inversion. So if you look at this, here, let me opening range gap. Let me turn off my opening range gap there so we can see. So when price came back I knew it would stall in this fair value gap right here that I'm mentioning, this bearish one. So it hit it and it pulled back. But look where it went. The midpoint of this order block that's now an inversion touched it to the tick. So when I saw that, and then we closed here and we came up and I saw we were about to close right here, I went and added in 831.50. You can see my arrow was right up there, right up here. Came down, closed. So right here, I added in. We're about to close. Boom, we closed. And at that point, I knew we're not going to trade back below here. This is going to be a bullish order block, which turned out to be a bullish order block. And hold on, let me erase this real quick because I'll show you what that is in a minute. And then from there, displaced sent us all the way through this high. Zero doubt in my mind because I knew we were going to go higher for the rest of the day. So that was just beautiful. And then if we look for the rest of the day, look at that. We kept going. And then we got past the 11 o'clock hour. So you have the 10:50. Oh, I hit the wrong button. Here we go. 10:50 to 11:10 macro here. Right? Didn't really do much, but at 11:10 here, what did we have? We created more relative equal highs. We're still bullish on the day. So what happened here? Price went up, did a nice run on this liquidity here, came back down a little bit into this inversion, 15-minute inversion. And then what did we do? We went into lunchtime. Here's the New York lunchtime, and wham, sent price right up to the midpoint of that 4-hour volume imbalance. And check this out. After lunch, we created a lunchtime low, lunchtime high. So now in order to send price higher, what do you need? You needed to do a run on liquidity below the low so that way it can go up. But this is where I want to show that this order block right here. Okay. I marked out this order block. The body. Okay. And you got the midpoint there. So keep this in mind here. Okay. I'm going to erase this one. So remember this. Now let's go. Keep going here on the day. I got to zoom out a little bit. So we ran up. So now after lunch, look what happens. We kind of go up and look what we do here. We create this area of smoothness. Okay. And then what do? We make a run on what? A run on this New York's lunch low. That's our draw on liquidity there. Oh, I marked this. Meant to mark the wick here. So if you mark the highest wick right here on this order block, watch this. Look how it came down, and when it did this draw on liquidity here on this lunchtime low, look where it came down to. That order block, the midpoint of the wick of the order block right there. And then now ran straight up through that area of smoothness I mentioned. Okay. Now watch. We went up. We didn't make it higher to this buy side area that I was mentioning it. Why? What happened? Well, we see this big sell off. Well, what happened is we're going to have the PM session. Our afternoon session stopped, right? It stopped trading right here. And then we go from here. Okay, so we're going to have a session low and a session high. So then from there, how do you go higher on the day if it's going to be bullish? Well, you have to have a draw on liquidity, a raid of that session low. A raid of that session low, and then you can run it up higher. But check this out. Another cool thing. If I go back to the 15-minute, okay, and I mark out this high now that we had on the day, this low now that we had on the day, where's the 70.5% ICT optimal trade entry? I have that marked out right there, 70.5% from this low to the high to the low of the day. Now let's go back to the 1 minute real quick, because I want to show this was this run down, right? Where did we go to? Look at that. 70.5%. Yeah, it overshot it a little bit and it hit that fair value gap right there. Right? That one there. Okay. Hit it right here, 70.5%. Now it's a raid of the PM session. So what I can imagine now that'll happen is we have that area up here still. So now we're running below the PM session, right? Raid on the PM session. So what I would imagine is sometime during the Asian session, we're going to make a new Asian high up here or a London high at some point. And then we're going to make a low somewhere. But we're likely, since we did this raid here, we're likely to draw up to there and create a high at some point through that buy side liquidity. However, if that doesn't happen during one of those sessions, then that's what I likely will be looking for in the New York AM session. So if that does not happen, then what I'll look for during the New York AM session is where is the Asian low and where's the London low. Okay. And then I'll look for a draw, a raid on liquidity there, and then a run up through this area where I had that buy side liquidity. More than likely. So I know this was kind of a lot to unpack in this one, and I'm going to get into the findings that basically gave me this whole framework with aligning the market top down, daily bias, all the way to seeing all these things and how they all line up together. I really want to find a way to put it all together easily and it's hard, right? Because there's so many things, there's so many ways to trade ICT concepts, but I really want to put it together in a simplistic way if possible. So bear with me on that. All right, so let's get into the video now real quick for the trade. All right, so here's the video for the trade during my session, recording myself here. And as you can see, I have my breaker marked out. I was fully anticipating everything. I'm going to go ahead and play it. Don't want to keep this one too much longer because I've already explained everything pretty much. But I just want you to see the execution and all that. And you can see the time right here is just a little after 10 a.m. We have that inversion here. We have a breaker here. And let me fast forward it 30 seconds. We have the fair value gap here about to form. I'm watching this area up here. Or that. Marking out the fair value gap. And I'm waiting because it's about to... Let me just let this execute real quick. There we go. Got the fair value gap. Now I'm just waiting. We have a market structure shift, everything. This is the 2022 model, okay? It's during the 950 macro. There we go. We hit the fair value gap. I hopped in, market order in, put my stop at the low, putting my target. I initially put my target, as you can see, kind of in the wicks in case the price wants to get just right here. But I was like, nah, I ended up moving it up above it because I'm like, no, we're going to go way higher. Like, that's ridiculous for me to put my stop down here. So you'll see, I kind of adjust it here in a minute. Pull over my P&L so you can see I'm trading my Apex accounts. Just going to keep fast forwarding it here a little bit. Actually, let's go ahead and increase the speed to 2. Increase it a little bit there. Now, I know exactly when to expect price could stall a little bit. And how do you know that? Well, we have these little imbalances here, right? That I'm not really expecting because this was just a draw, a little stop run here, a little stop hunt. But where it could is when you have this up close candle right there. Okay. You could experience a little bit of hesitancy right there when we get near the open. And you see this one has a wick, right? So right here between this wick and the body, you can expect, and then you have the midpoint, you can expect price could kind of, I say, hit a little turbulence. So you hit a little turbulence there. Fully, and I'm so confident in this trade. I don't care what it does. I'm staying in it all the way. It's got to come. It's got to reach this low right here for me to say I'm out. Until that happens, I'm riding with this as long as it takes to get up there. All right. So I'm fully expecting this little pullback here. No big deal. The next area I'd expect it is between this here and this here, this fair value gap. That's where the next area I'd expect maybe a push up and a little push back and then run up. So I'm kind of measuring out to see my, what my ratio is. There's 2. I wanted to see if I can get my 2-to-1. And I was kind of like, do I want to put it up there? Because right here where I put it was 1.84. So I was like, you know what? That's close enough. That's close enough. So you can see it push up. Looking nice, looking nice. Crossed above here. I wanted to see it close above there. Above that up candle. And I wanted to see us get this fair value gap. I wanted to see that happen here. And then I wanted to see this hold as support. Now I'm not going to move. I don't want to move my stop up to break even yet until I really see this hold well as support and then continue moving up. And I really wanted to see it close above the high of this fair value gap before I even considered moving this to break even. At one point I did move it up, and then I was like, let me put it back down because it very well could trade back into here. And you'll see that maybe. So we come up, and here's, like I said, where we can expect some turbulence. So I say right in here. See, I moved it up here. See, this is where I moved my stop up. And I was like, man, I can't move it yet because of this area. It could come back here, and I would hate for it to wick down and stop me out and then go. Like, I would hate that. So I'm like, no, I'm not ready yet. I need to keep my stop down there. And you can see I did put my profit up here. My take profit is above those highs right there. So I mark out this wick because I want to see it close above the low of this wick. We reach up. I'm still in with my 4 micros here. You can see that. Still in with my 4 micros. And I'll add in on this pullback here in a minute. Let's speed it up a little bit. Okay, now we're pulling back a little bit. And again, I am 100% confident in this trade. I have zero fear. Like I said, I'm going to sit in this thing as long as it takes to run up because it's going to get up there. So now we're pulling back, and I'm watching this right here. I'm watching this bar in the midpoint of it. I don't mark it, but I'm sitting there watching it. And I'm waiting. You can see, as soon as we hit this midpoint right here, I'm like, okay, here we go. Let's add in. So we come up. I add in 2 more. So, of course, it bumped my entry up here. And then I'm about to, as soon as we take this high right here, then I move my stop to break even. So you can see now it reflects here on my dashboard. Added into all my PA accounts as well. And I think as soon as this closes above, that is when I move my stop up. No, I guess I didn't. It got close. So move my stop up to cover. And here we go. As soon as it closes above this, it should just take off. As soon as this closes, you can see it close. And because this is an order block, we're going to see displacement up. And now, I mean, I can't lose at this point, so sitting tight. Just relax. Wait for it to run through those highs. Getting that fair value gap there. There we go. Shot right up through. And that was it. That's a wrap. That's how you do it. And this happens every day. The last couple days, I got the exact same trade. There was one yesterday. There was one Friday. So, like, I took a few trades. And, hey. Yeah. That's what you have to do sometimes. Take a step back, maybe take a break, and then come back. Clear your mind, and you can get it, right? You can get it. So there's my executions. Enter there, add it in, take profit. There we go. Hope you got something from this video. I know it's a long one. I'm telling you, I'm going to keep it shorter. 20 minutes on these recaps. 20 minutes. Just give me 20 minutes. I like to bring value to them. So I don't think there's going to be a time where I'm really going to just do a trade recap. That's just going to be useless. All right. So that's all. That's all I have. I hope you all have a wonderful day. I hope you've been doing really well. So more videos to come. I got a lot more coming out. So hope to see you soon. And as always, trade well, everybody. Take care.